All right, let's get right into it. Today, in this explainer, we are unpacking the incredibly high-stakes race Virgin Galactic is running against its own balance sheet right now in 2026. If you've been following the commercial space industry at all, you know we're at a massive inflection point. It is literally an urgent race between the launch pad and the ledger, and we're going to break down exactly what that means for the future of commercial space travel. Here is our roadmap for the explainer today. 1. The Delta era begins. 2. The financial reality check. 3. Key 2026 flight milestones. 4. The $750,000 space ticket. And 5. Trading the space race. Let's dive in. Section 1. The Delta era begins. Next-gen spaceflight. To really understand Virgin Galactic's current position, you have to look at the massive transition happening on the launch pad. The stark contrast between their legacy vessel and their future is just wild. Think about the VSS Unity. It was essentially a research phase vessel, handling maybe a flight a month with just 4 passengers. They actually had to pause Unity's commercial flights in mid-2024 just to save capital. Why? Because of the next-generation Delta class. This new ship is an absolute game-changer, built for pure scale. We're talking twice-weekly flights, 6 passengers at a time, and a lifespan of over 500 missions. That is the massive leap from a cool research project to a scalable, revenue-generating business. And this modular blueprint for the future of space tourism is already coming to life. The really amazing news here is that the first production spaceship has already moved from the assembly hangar directly to the test and launch hangar in Arizona. They're actively in the ground testing phase right now. But, as you can probably guess, building next-generation spaceships is definitely not cheap, which brings us to our next point. Section 2, the financial reality check, the ticking clock. Let's talk numbers. $227,000. That is Virgin Galactic's total revenue for the first quarter of 2026. To put that into perspective, that's less than the price of a modest home in most American cities. For an aerospace giant, it's basically a rounding error. With their flights currently paused, this tiny bit of revenue stems mostly from access fees paid by future astronauts. But contrast that microscopic revenue with this number, a $65 million net loss in that exact same quarter. They are burning through cash rapidly just to develop and build out that Delta fleet. So when you lay out the whole financial snapshot, the aggressive cash burn is undeniable. Now, to be fair, losses are actually narrowing compared to previous years, but they ended the first quarter with about $251 million in cash, cash equivalents, and marketable securities. At a burn rate of roughly $90 million per quarter, well, do the math. That leaves them with roughly a 2.5-quarter financial runway. This means the company is literally racing against a ticking clock. They have roughly 2.5 quarters to hit their massive Delta milestones before that $251 million in cash completely runs dry. If they don't hit their targets on time, they'll likely need to raise more capital, and you know what that means. Historically, that dilutes the value of existing shares. Section 3. Key 2026 flight milestones, the countdown. This schedule is the absolute core of our explainer today, because without hitting these targets, that cash runway shrinks exponentially. Every single investor, analyst, and space enthusiast is laser-focused on these dates. Ground testing officially kicked off in April 2026, but the really massive catalysts are coming up quickly. Q3 2026 is when the Delta class must begin its glide test flights. Then, Q4 2026 is the targeted first commercial research spaceflight. By early 2027, the goal is to be actively scaling up their flight frequency. Let's break down what those commercial launch targets actually mean in practice. They purposely paused the older Unity flights, specifically to preserve capital for this exact sequence. Those Q3 glide tests, they are absolutely critical. They must validate the Delta's design in the air. If that goes smoothly, it leads directly to the Q4 commercial launch target, which finally initiates real, scalable revenue generation. If they execute this flawlessly, they transition from a cash-burning R&D project into a scheduled service business. The ultimate target, a staggering 125 missions per year with just their first 2 ships by 2027. Section 4. The $750,000 space ticket, funding the future. So let's shift our focus to the customers who are actually willing to pay an eye-watering price tag for a 90-minute suborbital thrill ride. There is an immense backlog right now of roughly 675 customers just waiting for their turn in space. Keep in mind, the target capacity is 125 flights a year once the first 2 Delta ships are fully operational. This high-frequency Delta class is literally the only viable way they can ever hope to clear this massive waiting list. And what's super fascinating here is how the price has evolved. Over the years, tickets jumped from $450,000 to $600,000, and now a single seat costs a staggering $750,000. That backlog of 675 customers represents about $188 million in future revenue just waiting to be unlocked. Management even expects to close a new booking tranche right around those Q3 glide flights. And you might be wondering, who pays that much? Well, demand remains incredibly robust, because with competitors like Blue Origin pausing their tourist flights for a period, Virgin Galactic is virtually the only active game in town right now for private individuals wanting to go to space. Section 5, Trading the Space Race, SPCE Volatility. Now, let's take an objective look at how the market is reacting to this countdown, because the swings in the SPCE ticker have been wild. The stock has behaved exactly like a classic, volatile story stock. Just recently, it surged 125% in only 5 trading sessions. This massive spike was driven by a perfect storm: a Q1 earnings beat where losses were slightly narrower than expected, some spicy rumors of a new strategic investor building a stake, and a short squeeze heavily influenced by catalyst trading. It's even kind of acted as a proxy for the broader hype surrounding the whole space economy. I love this quote from investor Tim Sykes, who says, "Volatile story stocks can change your life or wreck it. Your rules decide which." It perfectly captures the neutral reality here. This stock is a speculative momentum play. It's heavily dependent on news and these upcoming milestones. It is absolutely not a guaranteed path to the stars. Ultimately, the stock's future relies entirely on management's ability to hit those exact testing and commercial launch milestones we just covered. Traders are hyper-focused on the Q3 glide tests and those Q4 commercial targets. The company also recently did a $30.5 million debt for equity swap. That bought them a little more time by cutting interest, but yes, it also diluted existing shares. Going forward, your base case is that Delta executes right on time, and the narrative finally shifts from a cash-burning R&D project to a fully operational space line. But the bear case? Well, those Q3 or Q4 milestones get delayed, the cash clock runs out, and it triggers even more dilutive capital raises. Which brings us to the ultimate question of the day. It is a true high-stakes race between the launch pad and the ledger. With the countdown to those critical Q3 tests ticking down fast, will Virgin Galactic successfully launch the scalable Delta era and unlock that $188 million backlog? Or will their balance sheet run out of runway before they ever get off the ground? It really leaves us wondering if regular scalable space tourism is finally arriving this year, or if the dream is just going to be delayed again. Thanks so much for joining me on this explainer, and I'll catch you in the next one.